Hi, and welcome to Investors Edge, the internet platform where you can turn a trading idea into a profitable investment strategy. On the web right now, there are dozens of sites that allow you to develop strategies to one degree or another, so you may be asking what makes Investors Edge different. The answer to that question lies in our data. We have access to a global database of securities, including not just pricing data, but fundamentals, analyst estimates, dividends, share splits, and share counts. This huge store of information allows us to look for patterns in data and design trading systems to exploit them. With that quick overview, let's dive straight in and design a model to show you what I'm talking about. First thing I need to do is decide on a name for our new strategy and to choose who can see it and which benchmark to use. So I'll type in my first model. I'll also leave the visibility at private, but I'll also select the S&P 500 as the benchmark. Sample dates represent different time slices of the backtesting data that you want to test against. You generally use in-sample data to develop and refine a trading strategy. Once you're happy with the returns and the risk profile of your system, you can then test it out in the out-of-sample data set. If this test comes back with similar numbers, then you can have some confidence that you've found a decent and robust trading strategy and not just fitted your idea to a historical anomaly. In this case, we'll leave the sample dates as they are. Thresholds are useful hints that allow you to see at a glance how your system is doing. I'll leave them as they are for now. Now that's the basics out of the way, we can start designing the strategy itself. The first thing we want to think of is which stocks we want to include in our design, which is where the universe system comes into. Here we'll deselect depository receipts, which are just interested in shares, and we'll select the United States as a country. You can see several other boxes where we just surface out often used factors that people want to put in. Let's leave those blank for now. I actually want to use something called the Petrovsky F-score, which we haven't got just a standard hole for. The F-score is a score of 0 to 9 that gives you a measure of the company's financial position. It comes across very simple, but under the hood it analyses profitability, leverage, liquidity, and operating efficiency. What we'll do is we'll type in Petrovsky F-score. As you can see, it comes up with a default. We'll make it greater than or equal to 9. The position criteria basically allows us to specify the maximum number of positions the system will open at any one time. I'll leave these with their default numbers for now and move on to the ranking section. This is where the power of the system comes really into its own. Ranking allows you to order your universe so that the securities we believe most likely to succeed come to the top of our list. In this case, my idea is that stocks with the lowest price to book value and the lowest price to free cash flow will show superior growth to others. Let's rank the universe equally on these two factors. Next, we can specify additional entry and exit rules. I'll delete these as we just want the top 10 securities in our list. We can also go down, let's change the starting cash to $50,000 and we'll rebalance once a month on the first day of every month rather than every Friday for now. So we designed our first trading strategy, we'll save that and move on and see what the backtest comes back with. You can see in the sidebar the sample result lines are greyed out. Let's click on the in-sample to run the backtest. We'll go down to the universe screener while that's running and have a look there. This shows us all the companies that have been returned for this universe on this particular date. There are 37 of them in this particular example. That's done. Let's go to the results. Here you can see a series of graphs and other figures that show us how the strategy got on. We can see here that it returned 14% a year, which is fairly good. We can also see that our starting cash turned into $74,500, which again isn't too bad. There's an awful lot of red on there. That's the thresholds that I mentioned earlier on. Green is good, and inside the threshold, red is bad. So we want to change that as we go forward. The equity curve shows us everything's heading in the right direction, but there are lots of peaks and troughs in there which aren't particularly nice, and we can see that in the drawdowns there. We've got 3 drawdowns of 20% plus and 1 of 35%. Other factors that we can see there, you can see the annual performance, a couple of good years in there and 1 bad year, and then we've got other distributions as well that are shown in graphical format. Let's go back to the definition screen, and what we're going to do, we're going to relax our criteria on the companies we include in the universe, and we're going to change the Petrovsky F score to 8 from 9, so 1 down from the highest score you can get and save that away. Once it's saved, we can then rerun the backtest again. While it's doing that, let's look at the rank screener. Rank screener shows similar to the universe screener, but it shows everything in ranked order, and we click on there, we can drill down and see some information on how the system came to its ranking. That's now complete. Let's go and see how it did. That shows an immediate improvement. You can see the graph looks better, and the annual return is up to 21% now from 14%. The drawdowns are also a hell of a lot better as well, down to an average about 10% there. I think we can probably do a little bit better than that as well. So we're going to change the frequency that we rebalance on from once a month to every Friday. We'll save that away and then rerun the back tester. While we're doing that, every time we save a strategy, it creates a new version, and we can go back and see what changes were made. Similarly with history, you can see every single run of the backtest that we do and the results that come back there. That's now finished. Let's go on and see what we did. Looking at the results of this last change, we can see that we've gone above 25% return. That's great, and all but 3 of our statistics are in the green as well. The equity curve looks a lot better. What we'll do, we'll run an outer sample back test on there as well. So we're now happy with that. We'll have a look at how it does in the outer sample model. Okay, the back test is complete. And we can see there that actually it's an improvement. So with everything looking good, let's run a full sample. That will take a little bit longer. While we're doing that, let's look at the position information you get on the system. Here we can see a fairly reddish tinge to the open positions. These are all the closed and historical positions that the system opened over time. We've also got a list of dividends, fairly self-explanatory there. And spin-offs occur when a company spins part of its business off. That's finished. Let's go and have a look. And that looks pretty good. You can see here that in just 5 minutes we've developed a trading strategy that would have returned us 21% a year over a 6-year period. Not only that, we've got a good understanding of the drawdowns in the system, so we'd understand what the pain in running this system would actually be, which is often the downfall of these sort of strategies. Thank you for watching. Please try some of our other videos on our site to learn more about robust trading strategies and building them with the InvestorsEdge platform.